All right, we've got both Andrew Holland and Nirmal Jain joining us on the phone line this morning. All eyes on how our markets are going to react to the developments in Greece. Andrew, let me come to you first. So we were discussing this late last week as well, and we were watching out for these developments. Just want to understand from you, that no vote, were you taken by surprise? What really happens next, and how will we be impacted?
So I think, let me think of the positive side of it. I mean, obviously the European Union and the ECB will throw money at this in terms of the bond markets to try and stabilise the bond market in the next few days and probably for the next few weeks. The Fed, who would likely to move in September, might defer their rate hike decision till later in the year, given what's happening in Europe. So that means you get liquidity sloshing around again, which will probably keep markets looking more positive. On the negatives, obviously, a Greek exit, to my mind, is not just disastrous for the country. I think it's just a big risk for the Eurozone. What else is other countries going to do? What are they going to be thinking? And it'll be the corporate bond yields probably in Spain and Portugal and Italy and Ireland, which will probably take a big beating. So huge volatility, I think we're going to see in the next, particularly in the next few days, but certainly for the next 2 months. So the positives probably outweigh the negatives in the very short term because of liquidity, but I don't think it takes away the bigger problem unless there's a negotiation taking place which resolves and kicks the can down the road a little bit further.
All right, fair. Andrew, just hold that thought. Let me also welcome in Mr. Jain, Chairman at IIFL, who's joining in. Mr. Jain, thanks so much for taking the time out today. Just in regard to what your sense is as far as these developments are concerned, because clearly there was a lot of overhang over the weekend or the last couple of days as to which way Greece would really decide. And now that you've got clarity on that, how do you believe markets are likely to play out in that context?
I think a lot of things still have to be not decided, and so whether Greece will remain in Euro and the Germany and France and other countries basically will agree to some sort of a bailout package, deferment of loans, whatever they wanted, or there will be an exit. So I think that is still not clear. Tomorrow there is an emergency meeting of Euro, and we need to watch that development as well. Having said that, so there are two scenarios. In fact, one is that the Greece, somehow manages to remain in Euro, and with this mandate, I think the Euro will be, the other countries will be forced to accept some of the bailout, some of the lenient terms for them.
Okay.
Or if there is an exit, then what is the time frame and how is it planned? So at this point in time, we're too early to jump to any conclusion. But many times these things may be blessing in disguise, because if you really look at Greece's problem, if they can have their own currency which is devalued, that automatically actually reduces the real value of pensions and subsidies and other things, and allows the country to be more competitive through exports. I think, but of course that will have a painful phase. Today at this point in time, I think we should wait and watch out for more developments, that how other countries take it and what happens next.
So Mr. Jain, from an Indian market standpoint, how do these developments really play out? How should investors be viewing the Indian market in context of all this overhang that we're seeing in regard to the Eurozone?
No, I think they will wait, because most of these, so the no vote was expected, but maybe the margin by which it has come has been a bit of a surprise, because almost 61%. I think, the no vote by itself is not such a big surprise. So our market would be maybe a little jittery at beginning, but I think would wait and watch. So most large investors would not panic, to my mind.
Okay.
They would rather wait for more developments to happen and then take stock of things. And as otherwise also Greece is just 2% of Eurozone's GDP. So I don't think it's a factor which should destabilize the global economy or can have a impact which is long lasting. So I think one should wait and not panic at this point in time. I would say that for India specific factors will play out more in the medium term.
Okay.
So one has to just at this point in time, I don't think there's any panic reaction to do either whether buying or selling.
Okay. Andrew, we were also tracking, of course, some of the volatility in China, and that's also looming large as a bit of a concern at this point. Is that on your radar too?
Yeah, I mean, I see, India in relation to China is pretty boring at the moment in this trading range. it's a bit like bungee jumping in China at the moment. It's no one knows what's really going on, but yeah, we're watching it because you don't have a 30% fall in the market for no reason. Only a few weeks ago, everyone was saying why you should be in China. So there's something happening there which probably we don't like, and the market's trying to tell us something. So even though it's been supported today, I think underlying there's something wrong with the economy, and that could come back and scare us all in the next 3 to 6 months.
Sure. All right. Mr. Jain, one thought as far as cues for the market are concerned, as well as to what one should be working with, because as you said, probably all right, we just seem to have lost Mr. Nirmal Jain out there. We'll try and reconnect with him. But Andrew, same question I was going to ask Mr. Jain as well is regarding the fact what should one be watching out for now? Because on one hand, you're watching, you're counting down to the earnings season. Is that where the focus is now going to shift towards? Because these global developments will continue to play out. But if you're looking from a medium to a longer term point of view, what do you watch out for in context of the Indian markets?
So I think we're going to be stuck in this trading range, I'm afraid, for some time of 8,000 to 8,500 for Nifty for at least for the next 2 months, and put the huge, kind of volatility there. I think positives are is that, as I said before, is you're going to get lots of liquidity, which will keep us all kind of less worried about Greece. You're going to expect a lower oil price and lower euro. So again, that's probably good for India, apart from the IT companies going forward. So what I would be thinking now is it's only by September would we start to see the kind of green shoots coming through, and that's what's going to be the driver for the market. That's what we've been waiting for, and that's what we wait for now.
Okay. Nirmal, just to get the same sense from you in terms of what you're tracking going ahead, what would you advise in terms of strategy? Any specific pockets you'd look at with a bit of caution given all of these global developments as well?
Yeah, I think for next few days, as far as Indian markets are concerned, I would say that one should wait and watch. So there are two major things that one needs to be wary of. Not only Greece, but also the corporate earnings of June quarter. They may not be as good. So from investment point of view, one would wait and watch for more developments to take place. More so India-specific factors such as reforms and news on corporate earnings.
Sure. Right. And in regard, Mr. Jain, in regard to factors that one needs to probably watch out for on the macro front as well. You mentioned about earnings, but on the macro front as well, because clearly you're also counting down to the way this entire Greece overhang could really play out or impact sentiment as to what the Fed's decision also could be. In regard to going forward from here, Mr. Jain, what do you believe is going to be the rate trajectory, macro factors that one needs to focus on?
Yeah, I think so. One should say that how these factors play out on the risk premium for emerging markets and risk aversion. So how the flow of FI money, whether it will be impacted in the short term, and that apart, of course, the macro factors in terms of our industrial production like monsoon spread and all those factors are relevant. So Greece is an important global event, no doubt about it. But I won't exaggerate its importance for Indian markets in the medium term, and this is one of the things, and I think we need to watch out other developments as well.
All right, fair enough. Andrew, just to get a call from you, would you be, and I know you just touched upon this as well, but would you be, staying away from some of those exporters at this point? Banks are taking a bit of a knock this morning, and all of those, all of that speculation around rates really going to be building in there as well. What's going to be on your radar?
Well, India, as you know, in my mind, is a domestic growth story, and therefore we haven't really been looking at the exporters apart from being very selective. So we don't want to go there. We'll keep with domestic India. We think that's where the growth story is going to be, and it'll continue to be for the next 3 to 5 years. Don't need to look at exporters.
All right, gentlemen. Thank you so much for joining us and taking us through your perspective on this very critical morning as well. Prakash, so a few more views coming in there as well, and you were also